we have Mass Financial Services CMD, Mr. Kamlesh Gandhi, joining in with us to talk about their numbers this time around. Seems like a good set of numbers reported by the company in terms of the Q1 numbers. NII and PAT have seen a rise on a year-on-year basis. Mr. Gandhi, very good afternoon, and thank you so much for joining in with us on ET Now. I'm going to start with, you've guided for a growth of around 20 to 25%. Now, you've managed to surpass the upper end of this guidance, even with a seasonally weak Q1. Now, given this, do you expect to revisit your guidance? Also wanted to know, your take on the housing business as well, and the competitive intensity over there.
So very good afternoon. This was our 113th quarter of a very consistent performance. We are more than 25 years old NBFC. And throughout, we have maintained a guidance of a growth of anywhere between 20 to 25%. But having said that, we are a company which would like to discover growth rather than just determine it. While the intent is to maintain between 20 to 25%, but given the opportunities in the market, it might increase. And this is what we have demonstrated over the last 6 quarters, that we have been growing in the range between 25 to 30%. But difficult to predict that, but we are quite confident of maintaining around 25% of the growth. In terms of our housing finance business, those small registered a very robust growth of 32%. And we are seeing a lot of buoyancy in the affordable space right now. We have set our systems and processes and distribution right. And we anticipate a growth of close to 30% in our housing finance company going forward.
Right. So Harsh also joining in. Just very quickly want to understand from you how cost of funds are moving for you now. Have they peaked? How should one look at it going into Q2 as well as Q3? And what impact will that have on your margins?
So if you say in Q1, our cost of fund increased, and despite of that, we could maintain our NIMs between 6.75 to 7%. And as I talk to you right now, we have a strong feeling that the interest rates have almost peaked for us, maybe a 10 basis point here or there. But with that, thing in mind, we are confident of maintaining our NIMs of around 7% going forward, as we have been doing since long.
Right. And, I also want to understand, if you could highlight something in terms of the repricing opportunity that is available on the yields. Just want to understand in terms of how the NIMs could also pan out, given your view on the cost of funds.
As that, we demonstrated that capabilities in the last 2 quarters also. So given the tenure of our loans, which is average around 18 to 24 months, which it runs down fast, we get an opportunity to reprice it from time to time. And because of that, despite of the increase in the cost by almost 0.75% or so, we could maintain the NIMs with a very minimal compression on the NIMs. So because of the tenure of the loans, we have the advantage of repricing it.
Right. Thank you so much, Mr. Gandhi, for those insights with regard to Mass Financial, and wishing you all the very best going forward as well. But